Hi everyone. Some people have been messaging me to ask about how to find a really good mortgage broker for your property investment journey. So I thought I'd do a quick 3 to 5 minute video on how to find a really good mortgage broker. I think so the first thing to understand is regardless of your property investment strategy, and there's lots of strategies, different strokes for different folks, almost all of them require lending from a bank, right, or a non-bank lender. So almost regardless of your property investment journey, it's really important to have a mortgage broker. And in simple terms, a mortgage broker is simply someone that connects you to your lender, right? You need to borrow money for almost every strategy. A broker connects you to your lender, okay? So there's almost 5 things to look out for when selecting a really good mortgage broker. Number one thing is that they're an investor themselves, okay? Now you can Google how to, find really effective and efficient lending for yourself, and the theory will make a lot of sense, but unless someone has actually applied that theory, it's really hard for them to give advice, and it's really hard for them to give their client really good outcomes. So you want a mortgage broker that has actually invested in property themselves, hopefully has more than one property, because as soon as you have more than one property, the complexity starts to add up, and that's when a really good broker will learn his trade or learn her trade. Okay, so that's the first one. They need to be experienced themselves, have gone through the trial of fire themselves. The second thing is that they've seen the cycle. Okay, what I mean by that is the normal property cycle. It goes up, it comes down, it goes flat, up, down, flat, etc. A good broker should have gone through at least one cycle so that they get an understanding of risk and risk mitigation, so that they don't recommend to their clients to fix when it's not prudent to fix, so they don't recommend their clients to go for a variable rate when it's not prudent to go for a variable rate, right? They need to be seasoned, is what I mean. Now the next one, next way to assess whether you're going for a good mortgage broker, an investment savvy mortgage broker or not, is to understand whether they have multiple lenders with whom they work, right? Multiple lenders with whom they work. Now there's so many mortgage brokers that predominantly cater to the homeowner market, people buying a property to live in themselves, and it's fine for them to just go with 2 to 3 lenders that offer the lowest interest rates. That's completely fine. But when you want an investment savvy mortgage broker, it's someone who has a relationship with more than 10, maybe even more than 15 banks and non-bank lenders, so that they can pluck exactly the right lender and give you exactly the right tailored solution for your investment strategy, okay? And then I think the next one to probably talk about is that they're in touch with the market. They're in touch with the lending conditions. They're in touch with APRA regulations. They're in touch with how willing and able different lenders are, week on week, month on month to give loans. I'll give you a really good example. So my broker, he called me a week and a half ago, and he said that NAB Bank are offering not only the lowest rates for a particular product which suited me, but they're also offering a $4,000 rebate if you go with them, and your loan is more than $250,000. So, the interest rate in of itself wasn't the most important thing. It was the fact that it was right for my strategy, but then the rebate was just a bit of a kicker. It was just a bit of a additional incentive. So I'm not across all of the lenders' risk appetites. I don't know all of that. And as an investor, you can't know everything. You can't know all of law, all of broking, all of everything, or tax, etc. You need to rely on a team. So I was so grateful that my mortgage broker gave me a call and said, here's what's on offer, and I went with it, and I've saved almost $10,000 in a single year because of that phone call. So that's how to find a really good mortgage broker. A couple of other tips, and I know we're going a little bit over 5 minutes now, but a couple of other tips is that the lowest interest rate does not matter. It's one factor in selecting a loan, and a good mortgage broker, a good investment savvy mortgage broker will tell you that, right? And they'll carve out and find a product with various permutations, interest rate being one of them, that's good for your short or long-term strategy. Okay, another thing to look out for is interest-only periods. So many people rush into investment and rush into getting a loan just because they can, and then in 5 years' time they realize that their interest-only period ran out, and then all of a sudden they're having to pay principal and interest and they can't afford it. Okay, and not many people, not many brokers actually talk about interest-only periods somehow. This has just been my experience, so make sure you ask your mortgage broker, can I get a 10-year interest-only loan? How does that affect my serviceability? And if that affects my serviceability so much that I can't even get into the market, then maybe a 5-year interest-only period is suitable. Okay, and if you have any questions about this, you can ask. That's fine. A couple of other things is don't cross-collateralize your property loans. All right, cross-collateralizing means where one house that you already have, it may be the one you live in or maybe the one that you have invested in, is held as security for the next purchase. It doesn't mean that you can't go to the same bank. Let's say you choose CBA. You can still have multiple loans with the same bank. Just make sure you don't use one to act as security for another, because what happens then is if something goes wrong with one, or if you need to sell one, or if, you know, a myriad of things could happen, then it's like a domino effect. Because everything is hinged on this first security, it's like a house of cards, it all comes falling over. So it doesn't mean you need to go with 10 different banks or 2 different banks. You can stay with the same bank, just make sure you don't cross-collateralize each security, and a good broker will tell you that. And the last one is probably a good broker has good negotiation skills. Everything in this world is up for negotiation. Nothing is set in stone, right? So when banks offer a rate to the market on their website or even over the counter via email, that is all negotiable. And a good broker knows exactly which points to hit, which tactics to use with various banks, so that you can get a 5 basis point, a 10 basis point, a 15 basis point, even sometimes up to 50 basis point discount on your investment property loan. And you know, even 5 basis points or 10 basis points can add up to thousands of dollars of interest payments every year. Okay, so this by all means is not an exhaustive list of everything you need to look out for. I'm not a mortgage broker, I'm not an expert, but here's a start for all of you guys when you do think about lending, of some of the types of questions to be asking potential mortgage brokers to make sure that they not only get the right strategy for you, but also save you thousands of dollars and set you up for success in 5-10 years time, and not do yourself a disservice now. Okay, I hope that was coherent, I hope that was a useful. Catch you next time.